When are you required to move into a property when using your VA home loan? It's a great question. We get it often from veterans, active duty folks, and National Guard and Reserve members. So we're going to go through the different requirements that they have. So there's 3 sets of rules, right? And it's going to be a little bit different for each category. So it's going to be active duty, veterans, and National Guard and Reserve members. So for active duty folks that are looking to purchase a property, there's technically no time limit to move into a property after you've purchased it if a spouse or child is going to be living in that property, basically satisfying the occupancy requirement for the veteran because the spouse or child is going to be living in that property. Now, let me walk you guys through a couple examples to kind of let it sink in and make it sense. So there's a couple of situations where this happens. And I'm going to go through some of the ones that we had. So we had somebody that was in Guam looking to purchase a 3-unit property in Chicago, and their child was going to be living in it, and they weren't going to be moving into it for another 6 years because they were still on active duty. They were able to do that because there is no time limit, and they were able to purchase that property, have their child live in it, and then voila, they were able to purchase a property. Then we have folks that are like stationed in Germany, Japan, South Korea, and they're going to be PCS'ing back stateside, and they're looking to purchase a property and move into it. Now, typically in those scenarios, people are moving within a 60-day period because that's kind of like the general gist of when you're supposed to occupy the property. The VA wants you to occupy the property within 60 days, but you don't have to. Obviously, if you're able to support the payment with your current financial picture, you could make that happen. So it just really depends on everyone's financial picture. But just to kind of reiterate hey, if you're overseas, you want to buy a property, let's say you're going to be stationed at Fort Benning, you want to purchase a property there, you're 4 months out from PCSing, but you have your orders, you're able to do so and purchase that property. Or if your spouse or child is going to be moving ahead of you and occupying it, that also works. Now, when it comes to veterans, it's a very different story, okay? So you're completely out of the service because there's also the Guard and Reserve component, which we're going to go over next. So when you purchase with a regular VA home loan, getting out of you're completely out of the service, you're supposed to occupy the property within 60 days. Now, that's kind of like the standard, right? You really don't need to explain much as long as you're going to be living in that property within 60 days. Now, if it's more than 60 days up to 1 year, the VA says that it is reasonable for you to occupy that property within that time period with an explanation. And anything more than a year out is just not going to make sense. So let me give you guys a couple examples of this, okay? So let's say that you took a job offer with a government agency and you're not starting for another 5 months or so, but you already want to purchase that property ahead of time and financially it makes sense, you can afford it with your current housing expenses, then yes, with an executed job offer letter that is non-contingent, you're able to do something like that. We'll also have scenarios where a spouse, or let's say somebody's going to be moving, we just had this happen in 11 months for a job status change. The family wants to move out ahead of time. So as long as the lender can document that, hey, this is what the veteran's going to be doing, and it's logical and it makes sense, then the lender can approve that. Same thing happens. Sometimes we'll have just again weird situations, even with like employment differences. Like, hey, someone's going to be starting a new job in 2 months, then we could actually use the new income as long as everything's been verified and it's not contingent on anything. But typically, again, 60 days, no issues. Anything more than 60 days to a year, you're going to have to provide an explanation on why. And then anything more than a year, it's not going to work. Now, let's talk about the National Guard and Reserve because it really does get complicated for these groups because their statuses change, okay? So there's a couple different rules depending on what the current status is. There's drilling versus being deployed on Title 10 or being state activated on 32 versus the AGR, which is the Active Guard Reserve, or you get put on active duty orders and do a rotation somewhere on Title 10 or 32. It just really depends and it does really get tricky for National Guard and Reserve members. So if you're in a drilling status, you basically meet the criteria for the veteran criteria that we talked about. Typically, you're gonna have to occupy the property within 60 days, 60 to a year out explanation, as long as it makes sense. Year plus out, it's not gonna make sense. If you're deployed, it's kind of tricky because you have different types of activations, right? You could be deployed overseas where it's going to be a 6, 9 month, or a 12-month deployment. Well, so then basically you satisfy the 1-year rule with an explanation, right? The tricky part with that is that you have to be coming back to a job. So if you left a job, and depending on if you made more or less, it's also going to depend on how you're going to qualify. So if you make more in your civilian job, they're going to use your military pay. If you make more in your civilian job, they're typically going to look at what you're making in the military, unless it's within a shorter window or you have the financial means. It really is going to depend on your situation, to be honest. But never disqualify yourself. If you guys have questions, please schedule a call with us. We're happy to walk through your situation because everyone's situation is different. Some are a lot more complex than others. So now let's talk about, so from a deployment status, right? If you're deployed, even stateside, up to there's different rotations that you can do, 2 months, 6 months, whatever. As long as if it's less than a year, then you have to be able to occupy that property. Now, some people get put on AGR orders, or they go on active duty orders for 3-year periods. Well, then you can use the VA loan, and then it's going to apply. The same thing is going to apply to the active duty component, even if you're on Title 32, but you're on active orders, okay? It's important to understand that because a lot of people disqualify themselves, which I think is unfortunate. When you change status in the Guard, okay, from being in the Guard where the eligibility requirement, which is right time and service and character of discharge, but for eligibility while you're on the National Guard or Reserve or active duty, it's going to be based on the time that you serve, and is it during wartime or peacetime. So right now, peacetime, typically you're going to have to be on 6 months of active duty orders, or you have to at least serve 6 months, and then you're eligible to use your VA home loan. But again, with National Guard Reserve members, it can be complicated because you might have been active duty before. You meet the 2-year requirement, you already can use your VA loan. But a lot of veterans, for National Guard members specifically, if they serve 90 consecutive days, or 90 cumulative days on Title 32 orders, and there's like some sub paragraphs to that. I'll drop a link below so you guys can check it out. And you have at least 30 consecutive days and a total of 90 cumulative days, then you can use your VA home loan. So there's a lot of cool parts to that. And then the other real big piece to that is really qualification, okay? Yes, you can be eligible and have your VA home loan, but you also have to be able to qualify financially, right? Which is the big ones are going to be credit, capacity, and collateral. Credit is going to be your credit report, what your liabilities look like. The VA has rules. Yes, the VA technically doesn't have a minimum requirement on a credit score, but lenders do, because it makes sense to have them. Capacity is going to be your job, right? So how much money you make, what's your financial position look like today, what it's going to look like down the road. And then it's going to be the collateral, which is going to be the property that you're purchasing, making sure that it meets the criteria for the VA loan. And if it doesn't, then you have to put up some money in the escrow account and get that fixed. We got a ton of videos on the channel around that. So yeah, if you guys have questions around this, again, schedule a call with us. Link is down below. We're happy to talk with you. Hit the like and subscribe button to get more content like this. And please share it with the community so we can get the community of veterans engaged and understanding their benefits. Talk to you soon.